The Republicans will not be the party of no. Smart stimulus is coming. What will it take to get gold back to new highs? Bitcoin overtakes gold as the hedge against central banks. Trade scenarios following the Georgia Senate runoff. And why IRA's favorite macro themes are bearish dollar, bullish Bitcoin, and bullish stocks. All this today and more on the Futures Radio Show podcast with trader and author of blog Notes from Underground, Ira Harris. Futures Radio Show is sponsored by CME Group. They are the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. For new show notifications, please subscribe to Futures Radio Show podcast on iTunes, YouTube, Google Podcasts, Spotify, or Stitcher. This show is also sponsored by Trading Technologies, RJO Futures, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 futures symbol RTY and Micro E-Mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com.
We're going to quote the Temptations. There's a ball of confusion. So there are a lot of things going on. You know, we're all geared up for the fiscal stimulus. Now there just came an announcement right as you turned on here that the White House is stepping back from even any consideration of it. But I think that's a gigantic mistake. You know, there's a lot of people who are talking about that. That if the Republicans hold the Senate, that they will become the party in no again, meaning they'll all of a sudden find their way to some sense of fiscal austerity in order to stop. I'm not in that camp. I think that's a gigantic mistake that people are going to make, because I think if the Republicans were to become the party of no, they would really destroy their credibility, because here they were under 4 years of Trump, and there was no fiscal responsibility whatsoever. They were. Let me put it in a historical perspective, and that's when Richard Nixon famously said, "We're all Keynesians now." This Republican administration with the Republican Senate, they're certainly all Keynesians, and they took a page from Richard Nixon's book, "Free Spenders." So I think if the Republicans were to go back into their hole and say, "Oh no, we're going to halt this," this is the wrong time to go that route. So I'm not looking for McConnell and company to be the party and no. And I think one of the strengths that Biden brings is that he knows how to negotiate with that group, and he knows where all the skeletons are. So he's where Trump just came in to throw stones, and I'm not making a statement about whether that was right or wrong to do. Biden knows how to negotiate with this group. So I'm not looking for the party and no, which you say, well, Ira, you always talk about what's the investable outcome. I'm thinking we are going to see investment type infrastructure programs from the grid to roads to airports to the Green New Deal. There's going to be massive amounts because they're all going to agree on it. And America is hurting enough as the world from COVID that it's the right time to embark upon that, because as others have pushed back at me over the years when we have discussed it, well, unemployment's too low. Well, there's now a lot of workers available, whether they're all in the construction industry or other types, we don't know, but it's a good time to get people trained. So the Republicans, I believe, will blow themselves up if they were to go down the road of the party of no. So now I look to investment themes going forward from there.
Everybody is talking about gridlock and how that is a big reason why we're seeing a rally in stocks. Also saying that it's very likely we're going to get stimulus, and everyone is leaning on that. So are you in that camp or?
No, I'm not in the gridlock camp. I don't. Yeah,
I know with the gridlock, but I'm asking more or less on the stimulus side of things. I mean, so you think that
we'll get a stimulus, but it'll be an intelligent stimulus rather than just money transfers, which is what we've been doing in order to sustain the demand side of the equation. Okay, that's what we have been doing, and rightfully so, because we would have gone into a major downturn had the demand collapsed with all the jobs and people. And I'm quoting Jerome Powell, who've lost their jobs through no fault of their own. We would have been in a much more dire situation. Now the stimulus required is not a money transfer stimulus. It'll be much more important to be directed towards rebuilding American infrastructure.
As I always say, so then what's the trade? I mean, is it bullish pretty much everything? That's kind of the way I was feeling coming out of this. Is going to be bullish gold, bullish bonds, bullish stocks. What are you thinking?
Yes, I think it'll be the next leg up in the invest on that game. And you see it with copper price. Copper prices are way ahead of themselves, thinking that once the United States goes, Europe is going to follow, and the Japanese are certainly salivating, and the Chinese, they're not as aggressive, but they won't have to be. And they're smart enough to pull back. That's actually the smart thing to do. And they're trying to boost their domestic leg of the economy. I mean, you see that, which is, to me, why the yuan has acted so well, but that plays into many things we've talked about. You know, I was not in that camp, and I thought that if the Chinese were really going to turn their economy around, they had to begin ramping up domestic consumption from 39%, probably to get it over 50 to 55% of the GDP. So that's what's going on in that part of the world. So it'll be incumbent upon the more developed nations to go down that. So I'm looking for, I would have told you I would love, if we speak first in the equity area, and believe me, this is not touting. You go do your own work, as I always warn and caution, because my risk parameters are not your risk parameters. I would have loved a company like Fluor, which, is really good at, or used to be good at, big engineering projects. Yeah, I'd look at Jacobs, or certainly over in Europe, ABB, which is the Swedish conglomerate who excel, and their stock looks far better. Fluor looks disastrous, but the best thing going for Fluor is they got rid of the old CEO and brought in a new one, because it's been a terribly managed company, in my opinion. So I'm looking for stocks like that. I still like the mining sector. Everything we talked about, I'm going to say played out pretty well. I did lighten up on my Archer Daniel yesterday as the grains, and I know you talked about that with Kushal, who's been, him and I have had private discussions about the ag markets, but those have been very, very well. I'm looking at Bunge still as a strong trade, because I think that food is always going to be there, and they were to me, what I loved about Freeport and Bunge and Archer Daniel, they were so unloved by the market. They could not, they were off sitting in a chair, and yet they were doing the right things. Archer Daniels have been paying down. I love companies that pay down when they shrink their debt load. It's always a positive. One that I'm paying attention to, I hold a core position that I've been in for 5 years already, Glencore, but I'm watching it closely because Glencore cut their dividend out to zero this year, as did Freeport, by the way, in an effort to pay down debt. And Glencore has had some political issues, because they're, you're in the mining business, you exist in countries and have to deal with people that cast long negative shadows. So they've been dealing with it. But with copper prices up here, lithium and cobalt prices moving up, the negative for Glencore to me is their big presence in the coal sector. But Glencore has paid down debt this year instead of paying dividends. So if they reinstate a quality dividend next year, I think that's one stock that I'm looking to really add to my position, because I'm only buying things when they turn down. Now I never buy on the up days anymore in the equity world. I'm buying only on down days, and I'm looking at sectors that have been very unloved. So that's what I'm looking at, and that'll still play out. I call it my deflation view, only because the opposite side is looking for deflation. And I'm not in that deflation camp, because to me, if deflation spiral sets in, the Fed is then a disaster, and all the central banks, because they're doing everything they can to prevent any type of deflation. That's been my theme for quite a while now. I haven't been blogging as much for personal reasons and just dealing with stuff, but it has been a theme. It's been a theme I've been constant with you, and I'm looking for more of it because these stocks really still, if you will put up longer term charts, they really haven't moved yet, and yet they pay a fairly sizable dividend relative to the market. And paying dividend while paying down debt and your underlying business improving, that's a pretty good story going forward. But again, not touting, do your own work and find your own risk parameters. But I think those are areas that you have to look closely at.
I don't know how many times that we have talked on the show and in person. I mean, a lot. I can't remember a time where I remember you being so focused on individual stocks and you're talking about commodities. Nothing from you about currencies right now. Nothing from you really about gold or silver at this point, but
back off.
Okay.
We'll get there.
Well, talk to us about those things, because for me right now, I'm really struggling to find what the theme is. And I think the only theme that I'm really trading actively is I'm still looking to buy dips in stocks. I have not seen any breakdowns, and I'm not trading individual stocks. Most people know I'm trading NASDAQ, Russell, S&P. And for me, those markets, you could take all of the news that has happened. I look to see if there's any technical breakdowns. There is not. The theme supports higher. So for me, I'm just really focused on trying to, in my little world of trading the futures, trying to buy the dips and stay more focused on the long side until maybe they hit some resistance with some confirmation, and then maybe I'd start to look short. But right now, I'm really only looking for that one side. And gold is another market I've been pretty active with on my swings, but it's just rangy, and I just see nothing in it. I just continue to get kind of chopped up in it. I don't know what theme supports that, so I've stayed away from it. And I go to the treasuries and the bond world, and I'm just like, it's another market where I'm just back and forth with it. I don't see a theme supporting it. So I want to go into those with you to see, why do you think that gold is so range bound? Why do you think that treasuries and bonds, to me, I mean, they've come off a little bit, and then they've rallied back a little bit today as we were talking, but still very rangy. What are your thoughts on that?
Yeah, that's a very good question. So let's get there, because that's the next leg of this theme. So the gold is range bound because the dollar hasn't, it's very stabilized in here. We're well off the highs of the euro. When the euro made its high up at 120.11, we're down at 1838 as we talk. Now, in 7 minutes begins an ECB conference with the head of the Bank of England, Jerome Powell, and Lagarde, talking about monetary policy. I'm sure it's zoomed, and they're just hosting. It's a regular annual conference, and they're just hosting the ECB. Now, is Powell, and this is the big thing, because if there's no stimulus coming from the Fed, stimulus coming from the Congress and the White House, that puts the Fed in a much more difficult situation, because they keep yelling for the need for fiscal stimulus. I actually agree with it. But if there's none coming, they're going to have to step it up here. So now it's 6 minutes. If we hear from Powell any conversation about yield curve control, which the Fed has not discussed since August, when there were a lot of Fed people talking about it, there's been no discussion, because I think the Fed got a little nervous at the way the market was reacting to all the discussion about yield curve control, because that's the next leg in their toolbox. And that will, if you hear the Fed embark upon yield curve control extending out duration, where they'll be buying more 10s, 20s, and 30s, I think that's the next leg down in the dollar, which will propel gold to new highs. Right now, the market has just been absorbing it. As you saw, you talk about the gold. Gold had a $100 sell-off from Sunday night to Monday morning of this week, because this is the first time it reacted to a very positive thrust up in the equity markets. And they viewed the equity markets, rally, because it was based on what? Right? You caught the the Sunday night, Monday rally, right? What was the real sustaining force behind that?
The vaccine.
Right. So to me, it was the vaccine. It was that and the fact that we wouldn't. So the market, once it saw the vaccine, and this was interesting because the equity market rallied heavy, but it sold off and basically settled back to where it was prior to the 5:30 year time, Central Time announcement on Monday morning about the vaccine. So we settled kind of right back in there at 35.50, let's say, right? You can go look at a chart. I'm not looking at it, but I'm pretty sure about that. So we settled back into that area, so that they took that away. But the sense of the COVID was that, okay, now we won't have to have as aggressive a fiscal stimulus. And so the gold took that as, whoa, we're not going to get as much fiscal stimulus. And I think people who were long gold in anticipation that, there was no restraint coming for fiscal stimulus coupled with monetary stimulus. So they were being long gold. And I think you saw a sizable correction because they said, well, I don't have to be here now. The equity markets are holding up. That's a good COVID thing. And we won't get as much stimulus.
Traders, we're going to pause for 30 seconds and we'll be right back. A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. Learn more at tryttnow.com. RJO is a long-standing brokerage firm with personal broker relationships to help you learn and trade futures. To learn more, please visit rjofutures.com. Yes. I mean, no doubt. I definitely thought about that as it happened, which brings me back to why I think it's such a challenging trade now, because for a while there, I was only playing gold on the long side. I would wait for dips. I've talked about this in every show, and I just solely play on the long side. And now I look at it, even though it hasn't broken down, I'm just not seeing the response from the action. You and I, we watch price action, and you look at it, and it's just hard now because basically what I'm hearing from you is that I need to hear some news now in order for that to be the driver of gold higher. That's kind of what I'm getting from you.
Well, yes, as you know, it's not always, in me, it's not political events. It's not wars. We've discussed this ad nauseum. So if you don't get that, but it's, the market was sensing that you were going to get massive fiscal stimulus, of course, with the Fed and the Fed being on hold for 3 years or 2 years, or that they're not even thinking about raising rates. That every other central bank here, you had New Zealand this week. The same. Everybody's been very dovish on their monetary stimulus. The gold was comfortable with that, but if you pulled back fiscal stimulus because of the coming vaccine, well, you were pulling out one of the legs from the stool that was supporting gold. Does that make sense?
It does. But you mentioned that the yield curve control, listen for that. And, and I'm saying more or less that gold doesn't have anything right now. We need to hear something else that can be the driver to get that new flow of buyers back in.
You're right. And I think, well, if you're not going to get fiscal stimulus because we're going to be tied up here in knots for a while, the Fed is on the hook. Because ultimately, why are they going to go to yield curve control? Okay, now they haven't used that phrase in quite a while. They're going to go to that because they're going to view it like 1946 when the Fed and Treasury reached that accord because the Fed wanted to raise rates, but the Treasury was worried about paying down all the debt from World War II, right? Which was massive. So they didn't want interest rates going higher. That's where you're going to be at now. The deficit has grown so dramatically that if interest rates go higher, the cost of funding the deficit is going to be huge. And that will become a political story in its own right, because when that increases, when a percentage of the budget increases dramatically as interest on the debt, you have to start cutting programs. Well, that's when you get into political hot water. So they have to be very concerned with this. Now, I'm ahead of myself here, but I am because this is where they have to go. The Fed has painted themselves into that terrific corner. They would like to see 6% GDP growth or 6% inflation. One or the other is going to be needed in order to lessen the impact of carrying this massive debt load.
What do you think about this move in Bitcoin?
It's kind of followed the gold. It was lagging well behind gold, and then it, resurrected again because you said, well, it's another diversification. So, it makes sense. It's, again, people are nervous about central banks. These are moves. I need an asset that's an alternative to central bank because all the central banks are broken.
Yeah. Well, it just feels to me like Bitcoin has just really overtaken that role. They're the leader in that role now, I guess is more of what I'm saying.
No, and you're 100% right. You're 100% right. So, and the diversification is smart, and I'm not a Bitcoin fan. So here, this just came out from Schumer, the $2.4 trillion stimulus plan that they had talked about 2 weeks ago. That's the starting point. That just came out as we're sitting here talking.
So the starting point was what? I missed it.
The $2.4 trillion that Pelosi was trying to negotiate with Mnuchin. That's the starting point for any discussion now, according to Schumer. So, I mean, we're in this is going to get, Anthony, I think the volatility, going ahead in the year, and it's not because Biden was elected or Trump was, it has nothing to do with it. We are sitting in a very difficult place because of the huge amount of debt that is taken on by all the major central banks to get their economies going. And this is going to lead to, some discussions. And again, the Republican Party cannot afford to be the party in no.
That's interesting hearing your take on that. And it's something I've kind of internalized and thought a little bit about. I was thinking, like, how is this all going to play out? And I want to get hyper-focused here a little bit with you because what for me as a trader right now in this environment, we all know it's been more volatile. I think that's going to continue to stay. And the one thing I lean on, specifically in the conversations with you, is honing in on that macro theme that I could go and look to see if my strategy is supporting that theme or if it's contradicting it. Either way, to me, I feel like there's an edge there if I feel it's one or the other. And right now, I mean, just hearing you talk about everything, I feel like the only two themes that I would even really consider trading on a consistent basis at this current moment is really the Bitcoin theme, because it's working. I mean, the proof is there, and being long that, which I haven't been actively trading that. I wish I was, but and I've been seeing it unravel, and I'm just watching it. It's just one of those things where it just happened without me. It is what it is. But and the equity side, which I've been trading pretty well on it, and just waiting for areas of support to hit, and just really mostly trading the long side. Aside from that, that's really it. I mean, look at the sectors and look at the themes right now, and just tell me what themes that you're seeing and where you feel that you, at least at this moment right now, because obviously things can change, but at this moment right now, where you feel the macro theme that you're looking at, that you could go and sit down at the screen and feel pretty confident in that theme, not breaking down because of a headline or quickly, to where you're seeing technicals support it.
Well, I've seen it in many aspects. Of course, the grains we were on top of, the metals we were on top of. Interesting. I love the low in the gold earlier in the week at 1848. It was actually a pretty good low. I have to tell you, it's frustrating because I had a good size buy-in at 1847.80 that I didn't get filled on. And I was like you, kind of so worn out and exhausted. So when I came back and saw the low, but I just couldn't sit in front of the screens, and I'm just tired. And I've really been, it's not, I'm not stressed. It's not stress. It's just the amount of stimulus that I have to absorb in order to get to break down my views on things. So I am watching these things, and I am a bear on the dollar. I am bearish the dollar, and I'm not in the camp that the dollar is the preserve of safe haven. Okay, I'm just not there. The dollar, the U.S. policy has been so irresponsible in so many ways that the status of the dollar gets undermined by irresponsible policy. Yeah, I understand printing presses and I understand the reserve, but the reserve status, as economists who I respect have argued for years, is either an exorbitant privilege or an exorbitant burden. And I believe it fluctuates. But the fact that the dollar is the reserve currency and they're doing anything that they can to try to generate inflation in order to elevate the U.S. economy and to bring back the jobs number. So everybody looks at this data, and I don't care about the data. I have to look at it because the market looks at it. But the Fed has told you that they are on hold and that their obligation now is to all the people who've lost their jobs through no fault of their own. And therefore, why should I care about the data? So until African-American employment gets back to the level it was before the onset of COVID, until Hispanic unemployment, women get back, until that and the wages return, why is the Fed going to be on the move? They told you that that's what their concerns are. So I put everything together from there.
That's a great point.
Now, is that going to lead to equity market rallies? Well, Goldman put out a thing, not that I care about Goldman, I don't, because they'll show you another analysis from a different. They always, they've got so many different covers. It's bearish here. I'll pull this person out. It's kind of like the crap on CNBC that you don't hear it from Gunlodge. But if Gunlodge is bearish and the market is down for 2 days, now all of a sudden Gunlodge shows up. I'm telling you, Bobby Heenan orchestrated this stuff. So I mean, that's where we lie at the moment. But I believe that this is going to play out, and that Biden and McConnell will be able, if it is McConnell, we don't know the way, and we'll finish up on that, I hope, with Georgia. We'll discuss that as to what are the potential implications. It'll be significant for the market, so we're going to have to live with what I consider the equivalent of bloody Kansas for the next few months, because it's going to be nasty down in Georgia. In fact, the theme song that I put on every morning when I start is Charlie Daniels, When the Devil Went Down to Georgia, because the devil's going to be in Georgia. No question about it. Not Georgia on my mind. The devil's going to be down in Georgia.
All right, we'll get to that. I just want to confirm a couple of things. So
sure.
It's just really pretty much what I thought. I mean, it's bearish the dollar. That's something where you're seeing a macro theme out there, and you're saying when you look at technicals,
we need the bearish. The market needs a bearish dollar because huge amount of dollar-denominated debt. This is something we've discussed. That has not gone away. That's the exorbitant burden of the dollar. The dollar is a reserve currency. If the reserve currency, which everybody's paying in, is getting stronger, that debt load becomes more cumbersome. And the Fed knows it. Now, I was fully expecting, although because the last Fed meeting in October was right before the election, so they kept their selves quiet. But I'm waiting for this. Fed needs to open up its swap lines like they did. And I'll tell you what, Notes from Underground was 2 weeks ahead of that back in March and 2 weeks ahead of the rate cut, because you could see what was going on and what needed to be done. And then by the end of June, those swap lines were basically all paid off, by the way, because the market had settled down, the dollar was starting to slip, and there was no need. But if the dollar were to rally here, and it really hasn't, right now we're caught in a range, as you rightfully discussed, if the Fed wants to get ahead of any sense of a dollar rally, all they do is have to say we're increasing the swap lines, the ability to transact from them. I think that's very important. So that with yield curve control, that would help push the dollar lower. And I'm looking for 125 in the euro. That's such a key resistance area for me. I think the yen is going higher. I think Asia is a better story than a lot of other parts of the world. And nothing tells me that more than the fact that Asia, with the New Zealanders and the and the Australians really pushing forth a very dovish monetary policy. Both their currencies have been performing very well, even in the face of that. So the dollar needs to go lower. And the Fed really needs to get in front of it rather than chase it like they usually do.
All right, I just want to recap a couple of things. I like to keep it super simple for myself, and I know a lot of the listeners as well. And because a lot of the things that you talk about, they're very important in my understanding of what's going on in the macro side of things. And to keep it really simple here, it sounds to me as though we have bearish the dollar, and really you're looking for anything that's really trading strong against it. Those are some trades that you're looking at. So it could be, you talked about the euro. I think that's one that I know you're focused on. And then how that plays into the bullish Bitcoin that we talked about. Like I said, I think that the Bitcoin, it's taken that leadership role as a hedge against the Fed. And it just is. I mean, whether people want to agree with it or not, right now it's outperforming what we would once see in gold, or, hedge against central banks. And then bullish stock market. So it's really, the macro theme is just kind of what I thought is the only things that are really just staring me right in the face that are still working are buy stocks on the dips, be more aggressive on the long side. I know we're intraday traders. A lot of traders out there listening are intraday. That to me just means still favor the long side. Bitcoin, I don't know how many people are intraday trading that. I know quite a few people are, but a lot of people are sitting on longer term in that, and that's still looking bullish, bearish the dollar. And that's the theme. And everything else, I guess, bond market for me has been untradeable for a period of time. You talked about the commodities. It also kind of fits into a bearish dollar theme. I think you got to do, like you said, you always say, do your own research to see what's trading against it. But that's it. I mean, that's it. That's what's there to be trading right now.
I think that summation is absolutely right. There's just no getting around that. So now we'll listen to what Powell has to say today, and everybody will jump. But that's it. And you know what? Why, they talk about the great rotation in the equity markets, and I'm giving you individual stock names because there are a lot of unloved stocks because everybody's been chasing the same momentum players, and they've been right. I haven't been in that game, but I'll tell you, I started back in April and May accumulating ag stocks and mining stocks, and it's been a really good run. I've been taking them off here, and I'm going to look for better opportunities. Because when stocks like that run 40, 45%, those are significant moves for large companies with, maybe a little too much debt to make people comfortable. And they're just been, and they're not high flyers. They're not Peloton. They're not Netflix. They're not built for that. It's like buy IBM and thinking it's going to run for you. It's not running. So I look at, everything I look at is percentage returns on any trade that I make. So if I allocate $100,000 to a stock and it makes 40% in 6 months, and it's not one of these phenomenal growth, it's not an Amazon, but it's a staid, solid company, I go, that's a pretty good return. Time, as I said about it when I sold a lot of Archer Daniel yesterday, when it got to a level, I said, I'm harvesting my gains. People thought that was pretty funny. So that's what I do. So I'm always looking at return on money. People say, oh, you can't, time to market. Well, to me, if I'm willing to work at it and see things, I may not be able to time it perfectly, but I get a pretty good theme going. And I think anybody who's listened to you and I over the 5 years we've been doing this, we've timed certain things pretty well.
Yeah, no doubt. That's why these conversations are so important, because I need to know those macro themes. And you and I have talked about this so much over the years, and how much you've helped me in understanding what's happening beyond the charts, because there's always that trader in everybody. We get down to the charts and we look at our strategies and we could see, what's the market telling us through the charts. And I think that that's extremely important for anybody. But you're going to get these moves like you saw, I mean, obviously the vaccine move and after the election move, those are one-offs. Those are big moves. But the whole point of it is that majority of the time, those bigger moves, those big news moves come to markets that are happening within a macro and technical trend. So the problem is being against those on a regular basis, intraday, maybe a little bit here and there, but being against them, sitting against them, that's tough. That's why I like to know this stuff, and I'm always trying to sit a little bit more long in my positions because of all the things that could happen in the news cycle and the macro side of things to stay with those trends. It's like, I'm not going to sit here and start fading this Bitcoin rally or fading this Russell rally or NASDAQ. Regardless of what my chart says, I'm not going to be sitting on those positions. Those are quick trades.
No, we'll look for much better entry points. And that's
exactly
what this conversation bears. Because when I say you can time it, this is not Kramer sitting there going, making noise. It's not that. It's looking at that global macro theme and then putting it into action.
Yes.
Right?
And just use the charts to navigate it and just know which side. I tweeted about this the other day. People look solely on ways to always get in. And I say, you know what? A big part of my homework is finding out which trades, which side of the market I shouldn't be sitting on a regular basis. Which trades should I not be in? I'm not fading Bitcoin. I'm not fading NASDAQ or Russell or S&P. Those markets, if I'm fading them, they're quick with tight stops. There's too much behind those to continue to go on those paths that they've been on, which is higher. So, that to me is what the importance of these calls, because everybody talks about managing risk. That's not just about a dollar amount in your stop. That's about knowing which side of the market to be on and which side of the market to stay away from. That's the way I feel about it.
No, that's, you know what? It's not always what you make, it's what you save.
Yes.
Right?
And I have not got caught in any of those big moves higher being short because I'm keeping them tight. Now I've gotten clipped on some breaks where I got in a little bit earlier, but I feel like that's okay because I live with those because I've made up for them when I've caught the rallies back up. But I'm not getting caught on the face rippers, selling NASDAQ at a minor resistance area to make a quick buck. And next thing you know, I'm getting my face ripped off on a rally. And the same thing would go for Bitcoin, which I haven't been in that in the long side. But anyway, you get my point. I think that is extremely important. Now, this is the last thing I want to talk about before I let you go today. And you mentioned it. You said you wanted to talk about it. You mentioned Georgia, the Senate. What do we look for here? Talk to us about what you think would happen if, just talk about whatever outcome, not that you think would happen, but if an outcome happens, how that will have an impact on the market.
Yeah, and what I'm telling you is it's my conjecture. I don't know anything,
Sure.
And I know there's all these, people out there doing all this fanciful work, as we say. Hold on one second. Let me just. So I don't know, but here's what I'm thinking. And the market celebrated that there was no blue wave, right? You rightfully said that. And then the COVID vaccine finished off and went the other way, right? That's what we see, and that's what we agree on. So now, do we get the Democrats to actually take the Senate if they win both those seats? Now, I made a $1,000 bet with a guy on Monday morning because he said that the Democrats were going to win both seats come January. And I said, both seats? Okay, we have a bet. And I've been doing some analysis. It's incomplete at this point in time, but this is going to be one nasty affair. And if the Democrats win both seats, then we're all I think the stock market will initially sell off because then they'll really worry about what the tax implications are going to be. But the stimulus side of it will mean that it'll probably play out very well going through because they'll be able to get more stuff through. And we'll see that infrastructure spend, and it will be bigger than we even think. And the states will get bailed out directly with transfer payments, okay, to keep unemployment rising. That's one of the unknowns. What happens with state municipal employees as far as, how many are going to get laid off because the budgets, so many of these blue states, especially who have big legacy union costs, public sector union costs, are weighing on them. So there's a lot to be digested here. But people who think that the Democrats are going to take Georgia, they're basing it upon the flawed, and it's a flawed, and it's proven to be flawed, that money buys the elections. Not true, because had that the case, we would have had a massive blue wave because the Democrats outspent the Republicans with ridiculous amounts of money, 2-1. And yet they did far worse than was expected, even though they did than prior. But they were expecting huge things. Now they're talking that the Dems are going to spend $1 billion down in Georgia. Well, I will tell you right now, here's what I know from all my years of studying, and I've read V.O. Key, Southern Politics. I've watched Wallace. I'm old enough. The more money you spend down there, I'm going to put a word to it right now, carpetbagging. And it's going to get nasty. And they will bring out, and I've looked at all the red counties, and I've looked at the blue counties, and 4 or 5 of the counties that went blue did so 51-49, 53-47, pretty close. So those are going to certainly have an impact. And what I'm really looking at here, Anthony, is I want to measure who can generate the greatest momentum. If the Democrats, percentage-wise, got out more of their voters than the Republicans did, I'm talking about on a statewide, county by county, which measures out to a statewide basis, the Republicans have more room to improve here. And I think that massive amounts of money is going to become a negative for the Democrats. That's my guess. So if that plays out right, then I'm certainly looking for the Republicans to win both of them and to hold.
And if that happens, what does that do to the market?
I think your analysis is right. I think because of Biden and McConnell have history and Biden knows how the Senate works, I think we'll get, hefty stimulus packages because, again, I don't believe that the Republicans can exist by being the party of no these times. And I think that what we're seeing is as the winter comes, we'll have less flu but more COVID, which will be a drag on the economy and will force them into more and more because the unemployment. I mean, we have unemployment down to levels. You and I talked, and I said I had a measure. I don't know if you'll remember it, but it said, come December, I raised this question. If unemployment was 8.5% and inflation on a annualized basis was at 6%,
will the Fed raise rates?
Right? That was my operative question. Well, now we're at 7.5% unemployment. Inflation, of course, is not nearly on an annualized basis. In fact, we got CPI today, which was 0. So we're not there. We know the Fed's not raising rates, and we had said before the Fed wouldn't raise rates. So I'm not looking for anything whatsoever from there.
Yeah. No. Well, Ira, as usual, learned a lot. Always appreciate your insight. Tell everybody where they could go to visit the blog. And, of course, I'll put your Twitter handle in the post for people to go and follow you there to follow the blog as well.
Let me give a plug because you and Kushal Thacker did such a great piece. When was it? 2 weeks ago?
2 weeks ago.
And, as you and I and Kushal have all talked separately, we're trying to put together something for everybody to be able to access on a daily basis, 5 to 7 minutes of what a macro theme looks like, besides the blog.
Yeah.
So if we would, with a, and we're going to use you because there's nobody better than you as to being able to drag this out so that let's get to the point, as you said, let's clarify it. So if you're trading the world without understanding global macro, I think you're trading with one hand.
Agreed.
So we want to prepare everybody to be a two-fisted trader. And not to say on the other hand, but to understand what your other hand is doing and how is it going to impact you.
Yeah, I'm looking forward to you and Kushal doing this. Getting to know Kushal over the past year or two. He's fantastic. I mean, and the two of you together is something I think everybody has to tune in. I know that I will be reading or watching everything that it is that you guys do. So everybody listening on the podcast, stay tuned. There's more to come from Kushal and Ira.
And if your listeners have an idea that they would think would be a format that works well, put it out there. We're nothing but listening. I didn't get to be where I was without being a good listener and being able to cut and go, oh, that's a really good idea. Let's get there. Because first of all, in order to be a good trader, you have to be willing to do that.
I 100% agree with you. I mean, every week when I'm recording podcasts, my focus is on listening and opening my mind up to learning more so I can get better at what I'm doing. And you don't get that by not listening. Listening is key. And taking it in and putting it into your world and making sense of it for you to be able to go out and execute. So, Ira, as usual, as always, thank you so much, my friend, for joining me.
Anthony, when you hear my stock picks, I don't start at the bottom up. I start top down. And when I see certain things, that's why when the grains and I see Chinese imports, these are things that start top down. If you can find your way and then go do your bottom up work. I had this discussion once with twice because I was on Wall Street Week with what's his name, Mario Gabelli, who's just a great bottom up stock picker. And I said, Mario, that's not my strength, but I can look from top down and find things. And if that avails it to you, and you can express it either in futures or equities, whatever way you want to go, then there's opportunity for you. Otherwise, as we always like to say, it's just all gibberish anyway.
You're the best, my friend. Thank you so much for coming on today.
All right, Anthony, be well.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.